And as I hit the record button right now, because I almost forgot once again, want to again welcome you all to our webinar about small business emergency loans that are available, and just take this opportunity to say thank you all for attending, and thank our two presenters today, who I want to introduce you all to. Mike said that I could give his short presentation, but I'm going to just tell you a little bit about who it is that we have speaking for us on behalf of Florida Retail today. So Mike Myhre is the Chief Executive Officer of the Florida Sbdc. In this role, Mike leads the statewide network of more than 40 offices and nearly 250 employees, providing strategic vision and oversight in the continued success of Florida's largest provider of hands-on business assistance for small and medium-sized businesses. Mike holds more than 25 years of economic and business development experience, dedicating his career to ensuring success for entrepreneurs and small business owners. He joined the Florida Sbdc network in January of 2011 and has served as its CEO since March of 2013. Prior to his tenure with the Florida Sbdc network, Mike held the position of Executive Director of the Office of Entrepreneurship and Small Business Development in the state of Minnesota, which I didn't know that until just a little bit ago, me being a fellow Minnesotan, so I appreciate that even more. In this position, Mike provided oversight of Minnesota's leading Office of the Entrepreneurial and Small Business Policy Development and Support Services, including direction of the Minnesota Sbdc. Although Mike was a graduate of the University of Minnesota and I a graduate of the Gustavus Adolphus College, we still welcome Mike to our presentation today. So Mike, do you want to start it off and talk a little bit? You said things are updated pretty quickly, so so much so that you don't even have any slides yet.
Yeah. So I apologize about that. My presentation, though it's only about 48 hours old, is already outdated, given that there's been some additional guidance that was issued yesterday and today with respect to a lot of the things in which I'm going to talk about. But first and foremost, I pray that God has blessed everybody with good health. As John said, I'm the CEO for the Florida Sbdc, and that's the state's principal small business development agency. It's important to understand that like the Florida Retail Federation, we're a key member of the state's emergency response team. And it's the Sbdc's principal responsibility on the response team to coordinate and facilitate the state and the federal resources that are available to small businesses that they need to sustain operations and recover from a disaster event. To achieve this goal, we work in partnership both with our state agency partners at the Florida Department of Economic Opportunity and our federal agency partners at the U.S. Small Business Administration. As John said, I don't have a presentation, but I will send the updated presentation to you, John, that you can distribute to your membership. On March 16th, Governor DeSantis acted quickly, actually, to assist our state small businesses by requesting the activation of, or by activating the Florida Small Business Emergency Bridge Loan, but simultaneously actually requesting a federal declaration for the activation of SBA's Economic Injury Disaster Loan Program. And I believe Florida was one of the first states to get a statewide declaration from the agency for activation of the Economic Injury Disaster Loan Program. Recognizing, though, however, the policies being enacted and appropriately to protect the health and well-being of our citizens in Florida and across the nation, Congress actually did something that was extraordinary. They came together in a bipartisan way and acted very quickly to put together the Coronavirus Preparedness and Response Supplement Appropriations Act, and this is better known as the CARES Act. And this is to provide that much-needed relief to assist our nation's small businesses throughout the coronavirus outbreak. Now, the CARES Act includes many different provisions across a lot of different areas, and overall it was a $2 trillion disaster bill or supplement bill. But it included three specifically provisions significant to small businesses in our nation. That changed or enhanced Small Business Administration disaster loan or loan guarantee programs. And I'll discuss briefly at all three, and then Victoria will take a deeper dive into each of those as well. First is the debt relief program. for existing and new SBA guaranteed loans, often referred to as the 7A loans or 504 loans. And this can be a great deal for your business if this is the relief that you need. Now, this program provides immediate relief to small businesses with non-disaster SBA loans. For those with existing or new SBA 7A or 504 loans, this program provides 6 months of payments for all of these SBA 7A or 504 or even microloan programs. It's important to note that these are not deferments, but rather the full loan payment of the principal and interest of these loans that you receive through your certified banker or lender, which you or and the borrower will never have to repay again. So I like to say that this is kind of like the rich uncle who writes the check to cover your loan payments for the next 6 months, except for the rich uncle is Uncle Sam. So if you have an existing SBA 7A loan or 504 loan, SBA will make these 6 monthly payments directly to your lender on your behalf starting next month. If you're about to close on a 7A loan or a 504 loan, SBA will make up to 6 months of payments up to the loan payment due date of September 27th. So if you don't close on your 7A loan or 504 loan for another month or two, you'll only benefit, 4 or 5 months of these loan payments. Now, these are everyday SBA guaranteed loan programs that are administered through SBA certified lenders. Therefore, if you have any questions about how this program is going to work for your existing 7A or 504 loan, I would encourage you to reach out to the lender that holds that particular note. Now, the one that's gaining a lot of momentum and extremely popular is the Paycheck Protection program, often referred to as the PPP. And this is an expansion of the everyday SBA 7A loan guarantee program. This is extremely popular because it can provide the greatest benefit to our small businesses if you use the loan amount for the very restrictive items that are described in the CARES Act. When Congress created the Paycheck Protection Program, it was intended to provide this emergency capital to small businesses to help them meet their short-term ongoing expenses, principally payroll costs, until the business could reopen or return to full operation. And so what this means is that these are resources intended to help small business employers really retain their employees by being able to continue to pay them their current wages, even if the employee is not working due to the business's closure, versus having to lay them off and potentially losing them altogether. To be eligible for the Paycheck Protection Program, you must have fewer than 500 employees or the statutory amount identified for your industry and federal statute, but whichever one is greater. This was something that was just clarified in the last couple of days. If you have more than 500 employees, but unsure whether or not your industry size standard is something greater than 500, you can go to SBA's website at sba.gov/size to search your industry to learn what your size standard is. Now, for the employee threshold test, it's important to also note that lodging establishments and restaurants, any business that falls in the industry classification code of 72 underneath the North American Industry Classification System, is looked at on a per location basis rather than a total business basis. Meaning that if you're a restaurant owner and you have 5 or 6 different locations, but you have 1,000 employees throughout all of those locations, they'll do the test based on each location rather than the total business in all locations, the aggregate of all of the locations. For non-employers, these are the self-employed individuals or independent contractors, sole proprietorships. They are also eligible for the PPP, but there's certain restrictions with respect to non-employers or self-employed businesses. Now, I get the question often, what about nonprofit organizations? Only nonprofits or private nonprofits that are 501c3s or veteran organizations that are generally organized underneath 501c19 or tribal businesses, but now also faith-based organizations are eligible for a Paycheck Protection Program loan. I get a lot of questions from chambers of commerce or homeowners organizations that are organized underneath different areas of the tax code underneath 501cs. but they're not eligible for the PPP, but they are eligible for SBA's Economic Injury Disaster Loan Program. Now, to calculate the maximum loan amount, it's actually a formula. It's the lesser of 2.5 times the average monthly payroll for the past year or calendar year 2019, or 10 million. But if you're a business that was organized just recently, say since January 1 of 2020, or you're a seasonal business, so your payroll isn't necessarily spread out over a 12-month period of time, but rather a more condensed time, there's a different time period that's used to calculate your average monthly payroll. The PPP loan is a loan, and the loan proceeds can be used for any business operating expense during the period of February 15th through June 30th of 2020. However, one used for very specifically defined purposes that are included in the Act, principally payroll cost. During this period of time, borrowers are not required to repay the loan. This concept is known as loan forgiveness. So for a Paycheck Protection Program loan to be forgiven, a minimum amount of the loaned amount of 75% must be used exclusively for payroll costs. Now, we're often asked, well, what is payroll cost? Well, payroll cost is the total sum of compensation in which you pay a particular employee. So it includes salaries, wages. If you have employees that earn wages based on tips, it includes tips. It includes if you're an employer who offers personal leave, personal time off, such as vacation or sick leave. It includes anything that you incurred in costs with respect to that. It also includes any employee benefits if you provide health insurance costs and or retirement benefits. So it's the total of all of that together that makes up payroll cost. There are a couple of key limitations, though, when calculating your payroll cost. Only the first $100,000 of total compensation per employee is allowed to be included as part of the payroll cost. That also applies to self-employed individuals. Also, if you have any employees that are not principally based or placed in, or not living in the United States, their payroll cost cannot be included in that calculation. Now, one of the questions that has come up quite a bit is, well, what about business owners in the wages in which they earn from the business of pass-throughs? If you're a business owner that does not take a salary, and that is, you're not a W-2 employee of the business, and you have earnings that come to you in forms of distributions or draws from the business, their draw or distribution cannot be included as part of the business's total payroll cost. Only payroll costs in the form of salary or wages and the other items in which I discussed are eligible for the Paycheck Protection Program. Owner draws and distributions are not included. Those things that are generally part of Schedule K of an individual's tax return are not eligible for the Paycheck Protection Program. Now, providing an accurate calculation of payroll cost is not the responsibility of the lender, but that of the borrower or the business owner. And so, you know, I strongly suggest that you err on the side of conservatism when calculating payroll costs. If you're not sure if something should be included, I wouldn't include it in the payroll cost, or seek some advice from your accountant. For any portion of the loan not used for payroll costs, there is some that can still be forgiven, but it must be used for payments of items like commercial mortgage interest, commercial rent, and or business utility payments. But collectively, this total amount cannot exceed more than 25% of the total loaned amount. Remember, at least 75% of the loaned amount must be used for payroll cost. So it's my recommendation that you really detail and track these costs if you're going to try to include them in the loan forgiveness amount. Now, there is no origination or closing fee for Paycheck Protection Program loans. Any fees that are part of this program are actually paid for by the federal government directly to the lender, and the lender cannot include those fees into the loaned amount. There are a couple of additional items that I would mention about the Paycheck Protection Program. If you received an SBA Economic Injury Disaster Loan, from January 31 to, I believe it's the beginning of April, you can still apply for the Paycheck Protection Program loan. But if your idle loan was used for any payroll cost, you'll simply refinance that underneath the Paycheck Protection Program, because that's where you're going to get the maximum benefit. But if you received an economic injury disaster loan emergency advance, this is that commonly known as $10,000 grant, and I'll touch on that in a couple of moments. You have to deduct that amount from any loan forgiveness that you get through the Paycheck Protection Program. Now, the Paycheck Protection Program loan is not a direct loan from SBA. It's actually administered through SBA certified lenders. And while SBA has a portal where you can search for these certified lenders, my recommendation, and this is a highly recommended, is that you first approach your banker in which you have your business accounts, where you hold your deposits and or have business loans with. Your bank has a vested interest in helping you continue as a going concern. They want to keep you as a customer. So they may be already an SBA certified lender, or they may be pursuing becoming an SBA certified lender. And if they are not, they may be able to recommend you to somebody in your community that can help you with the Paycheck Protection Program. There is a lot of documentation that's going to be necessary for a Paycheck Protection Program application, but it's pretty standard loan application, business loan application information. SBA and Treasury has created a sample application. However, each lending institution may customize that particular application as they see fit. They may add some additional information onto the application form. But I still highly recommend that you download from SBA's website that sample application and complete it, because that information is definitely going to be on whatever the lender's application is. You're also going to need some other documentation, including your current SunBiz registration. You're also going to need copies of your payroll tax reports. These are things like your W-3s or your Form 9041s or 940s. You're also going to need copies of your payroll reports for each period for 2019, and I would recommend also the first quarter of 2020. And if you offer things like health insurance, you want to bring invoices of the health insurance premiums that you paid for your employees. And if you offered anything like a retirement plan, also bring copies of that documentation as well. If you intend to use any of the proceeds for those other allowable items that are still forgivable, like mortgage interest or lease or rent payments for commercial property, or any of those commercial utilities, bring documentation such as your mortgage or lease agreements and or the 3 months utilities bills for your business. Other things in which I recommend that you bring is if you have financial statements, a profit and loss and balance sheet for 2019, you bring that as well, and any interim statements for 2020. Those can provide some additional justification to the lender as well. And then finally, you're going to also be required to complete and sign this Irs Form 4506-T. It's basically a request for the owner's personal business tax transcripts. And this is going to be for any business owner that owns at least 20% or more of the business. So those are going to be the principal documentation requirements. Now, each lender may have some additional requirements that they're going to require of borrowers as well. So you're going to have to check with your lender to see whether or not there's some additional documents that you're going to need to bring with you for that. A question I often get about this particular loan program is the forgivable amount a taxable event for me? And the answer to that is unlike forgivable loans in the past with, say, the 2008-2009 economic downturn and forgivable mortgage loans, this is not taxable income to you. So whatever part is forgiven just simply does not become a taxable event to you in the future. The last program is a standard SBA disaster loan program, and that's the Economic Injury Disaster Loan Program. These economic injury disaster loans are direct loans from SBA, so you apply directly to SBA for these. Now, this is a long-term solution. You can borrow up to $2 million, and it's really based on the operating expenses that you need. But the CARES Act actually expanded the eligibility and allows SBA to make loan decisions for the economic injury disaster loan based on credit score. Previously, you had to put together a big package of information and justification. So they really streamlined the decision-making process along with the application process. There is this other element that the CARES Act added to the Economic Injury Disaster Loan Program, and that is the ability for applicants to request an emergency advance. And there was some guidance that was issued that came across my desk that said the emergency advance up to $10,000 is based on $1,000 per employee in the business up to 10 employees. Victoria can help me verify if that is true or not. Now, the beauty of the Economic Injury Disaster Loan Program for nonprofit organizations is that if you were not eligible for the Paycheck Protection Program, such as if you were a 501c, something other than a 3, D or E, you are eligible to apply for the Economic Injury Disaster Loan Program, so long as you had fewer than 500 employees and were in business prior to January 31st of 2020. The terms with respect to the Economic Injury Disaster Loan Program, these are loans of an interest rate of 3.75% for a term of up to 30 years. So that's why I say it's a long-term solution. There is no collateral for any of the economic injury disaster loans in amounts of $25,000 or less, and there is no personal guarantees for loans that are $200,000 or less. With both the Paycheck Protection Program and the Economic Injury Disaster Loan Program, there is no prepayment penalty. And again, for this particular program, the Economic Injury Disaster Loan, you can find the application directly online at sba.gov/disaster. Now, my final recommendation and closing comments are, I'm often asked, well, which one should I apply? You know, there's so many different options out there for me. My recommendation to you is that you apply for both the Paycheck Protection Program and the Economic Injury Disaster Loan Program simultaneously. Now, you can't use the proceeds for the same business purpose. That is, you can't borrow from both loan programs as a way to cash flow the same thing within the business. But if you maximize the forgivable part of the Paycheck Protection Program and then utilize the Economic Injury Disaster Loan Program for those things that are not forgivable operating expenses, then you'll maximize the benefit to the business. Furthermore, if you are approved for an Economic Injury Disaster Loan, it doesn't mean that you have to take the full loan amount. You can take a lesser amount or no amount if you don't need it, if the Paycheck Protection Program offers you everything it is that you need. So that's my recommendation. I'll turn it over to you, John, so you can introduce then Victoria.
Thanks so much, Mike. We appreciate it. And before I turn it over to Victoria, one question that has come in so far in our chat that's specific to Florida, so I wanted to see if you would address that before we continue on to the SBA side of things. Is question, we've had this from others too, on the Florida Small Business Emergency Bridge Loan Program. This specific person said they applied last week, just wondering when they will hear back. Said the app went in Monday, March 30th, no response, and the status is still submitted. So can you give any direction on either where they would find that information or what kind of time frame they would be looking for?
So you can go to find out what the status of your application, but it sounds like this particular applicant knows what their status is because it's in the status of submitted. But if anybody else has a Florida Small Business Emergency Bridge Loan application that they submitted and they want to know what the status is, they can go to floridajobs.org/COVID-19. The Florida Department of Economic Opportunity, I think, has put together one of the best websites with all of the information of all of these various loan programs. Now, to answer the question, we received nearly 30,000 applications for the Florida Small Business Emergency Bridge Loan Program. To put that in perspective, we received about 2,000 for Hurricane Irma, which was the largest utilization of that program ever in the past. So we've received more than 10 times the amount of applications than we did for that major hurricane event that affected most of Florida. We're working diligently to get through those. My commitment to folks has been, we're doing our best to be able to be responsive within 2 weeks of the submission of a completed application. Now, there are limited resources in that program. So we know that we're not going to be able to fund every single application that has been submitted. But we're working diligently through those as quickly as possible, but it is on a first come, first served basis. So to this particular applicant, I would encourage you to not necessarily wait to find out whether or not you're going to get the Florida Small Business Emergency Bridge Loan, because even if you do and you're approved for it, you can decline it if you've already accessed federal assistance. But really, the bridge loan program is intended to be that bridge from the time of disaster until federal assistance is available. And given that the federal government and Congress acted so quickly, I would chase after the federal assistance now.
That's great. Thank you so much, Mike. And move in to introduce our second speaker. And Victoria Guerrero is the District Director for the U.S. Small Business Administration in the South Florida District. She has over 20 years of experience leading, managing, and transforming both private sector corporations and public sector entities. Victoria is a South Florida native, and she's a prior small business owner. She's always had the entrepreneurial spirit. With clients ranging from construction to real estate to media, her passion has always been helping small businesses grow. Victoria is responsible for leading one of the highest job creation districts in the nation. She oversees the delivery of agency programs such as financial assistance, management, counseling, and business development throughout the South Florida area, which encompasses the 24 counties southeast and southwest of Orlando. Additionally, Victoria has oversight and responsibility for the SBA resources partners located in her district, the 14 SCORE chapters, Counselors to America's Small Business, 4 Women's Business Centers, and the Small Business Development Center Network, which Mike is the CEO of. Serving 1.5 million small businesses, the South Florida District is ranked for the last 4 years in the top 5 of 68 SBA district offices nationwide, after continually exceeding $1 billion in small business loan guarantees, spurring job creation and strengthening our economy. Victoria holds a master's in business administration, bachelor in communication arts. Not sure where from yet, but I don't think it's Minnesota. So holds multiple professional and industry certifications. So we welcome Victoria Guerrero. Victoria, thank you for joining us.
Thank you so much, John, for having me. I do appreciate it. So first and foremost, I want to tell our small business owners that, the SBA, along with our resource partners such as the Sbdc, we're here for you every step of the way, not only right now through these challenging times, but throughout the year. These are resources that you have at your disposal to help you with any challenges that you may be facing with your business throughout the year, not just now in times of disaster. But as we are here today to speak about the disaster relief, I do want to reiterate that if you do have any questions, my office is available for you, as is our resource partners such as Mike's Sbdc, our SCORE, and our WBCs that John just mentioned. So now I do have to say, Mike did a wonderful job in going through all of the programs that we have. The slides that I have here, John, are just going to reiterate that, and I want to make sure that we have enough time to answer any questions that folks have. So I'll leave it up to you, John. If you want to, I can go through our programs a little bit more in detail, though Mike did a wonderful job in explaining each of the programs we offer, or we can start answering questions if you have some questions there in the queue. I'll leave that up to you.
Okay, we do have some questions in the queue here, so let me just jump over real quick and take a look at. So one question specifically related to the PPP program is many businesses are applying for the Paycheck Protection Plan, and this person's bank is a community bank in Central Florida, was just only able to start a test wave run of sending applications in the morning. Do you know when we might be able to see when these loans are going to close? Question is it going to be a month? Is it going to be 2, 3? Can you give some indication, Victoria, of the time frame?
Well, I do know that the PPP program was designed to be able to put funds out there right away. As of this morning, there's about $62 billion that have been earmarked already. But now, as far as the turnaround time goes, from the time that it's approved to the time that the funds are dispersed, I don't have a timeline on that. I don't know, Mike, if you've heard anything on your end.
No, I think it's going to vary from lender to lender, given the systems or processes that they have set up. But Congress's intent was to make this quick, short-term capital that small businesses could access. So I know that there will be a real effort by both the agency and by the lending community to get those disbursements out quickly.
Okay. Another question was, under the Paycheck Protection Loan, a sole proprietor business cannot include the payment made to themselves as a monthly draw. Can a sole proprietor include payments made as a 1099?
You know, that's Victoria. You want to answer that question, because I'm not sure I have a clear answer for it.
Well, from what I've been told, first of all, as Mike mentioned, if any disbursements cannot be placed into the salary cost of the calculations that you're going to be using. Now, if you're a 1099, you can utilize things such as tips and wages and things of that nature. But can you repeat the question again? I just want to make sure that I answer direct the question that was asked.
Can a sole proprietor include payments made as a 1099?
Okay. So if you're a sole proprietor and you hire individuals that are 1099, originally, but this has changed. Originally, you were able to include those 1099 payments in your payroll calculation. But that did change recently, and as from what I hear, as of today's date, April 7th, those 1099 costs or payments that you would give to the 1099s cannot be included in the salary cost for your organizations. The reason being is because 1099s themselves can now apply for the Paycheck Protection Program indirectly themselves, whereas in the past they weren't able to. Now they're able to do it themselves.
I'll just add that, all of the guidance with respect to self-employed individuals, sole proprietorships that don't have employees, hasn't yet completely come out. Those businesses technically can't begin applying for the Paycheck Protection Program until this Friday. And I know that the agency is working diligently to put out guidance with respect to these sole proprietorships or self-employed. So while I said that distributions and draws cannot be included as payroll costs, I suspect that SBA is going to issue some guidance to lenders about how to calculate payroll costs for these self-employed individuals.
Okay.
So stay tuned. Yeah.
Okay. Another question was, I've been told that in order to receive the $10,000 SBA forgivable loan, you must also apply for a larger loan. If you're approved, the $10,000 loan will not be forgiven. Is that true?
No, I haven't heard that. You can go ahead and apply for the Economic Injury Disaster Loan Advance. That particular advance, you do not have to pay it back. Whether you're approved for the larger loan or not, you do not have to pay that back. Mike, I don't know if you have any other insight on that.
No, I would ask, but not Victoria. You had heard that the agency is using a formula of an advance of $1,000 per employee up to 10 employees.
I have not heard of that particular formula. I'm not certain if it's in the final rule. I don't remember seeing that, but it hasn't come down my way as of yet.
Okay. Next question. We have mostly part-time employees. Do we count each employee, or do we add up the hours of the part-timers to determine the equivalent of full-time employees?
That's a good question. I know the way the rule is originally written is FTEs, which is full-time equivalents. Mike, any insight on that one?
For purposes of eligibility with respect to being less than 500 employees, they look at just employees total, the aggregate amount. So it doesn't matter whether or not they're part-time or full-time. But with respect to forgiveness and your ability to retain a certain percentage of your workforce, and Victoria, you know this part better than I, you know, your payroll costs are forgiven if you maintain a certain level of employment during the period of February 15th through June 30th. And I believe it's 75% of your employees or employee costs. So if you go below that particular threshold, then that part of the loan won't be forgiven.
Correct.
Okay, here's another question about the economic injury disaster loan. And actually, I guess this is not the Florida one, this is the EIDL. We applied for the economic injury disaster loan, got an application number. Is there a way to see where we are in the process?
The best thing to do for that is to email disaster customer service at sba.gov. It will take them some time to respond to you, but you can contact them and let them know what your application number is and when you applied and see what the status is. That email address again is disaster customer service at sba.gov.
And that's all one word, disaster customer service.
Yes, that's correct.
Okay, great. The next question is, our bank has not opened the application process, so do we have any other options to apply?
Yes, you don't. Go ahead, Mike.
For the Paycheck Protection Program is what it is that I'm assuming that they're asking. Yes, if their bank is not a certified or participating lender for the Paycheck Protection Program, you can go to sba.gov and they do have a search portal where you put in the zip code and search for a certified lender in your community. But here's my additional comment to that. I know that particular portal is not inclusive of all of the branch locations of a particular business or a particular bank, excuse me. I had learned and searched for a particular bank that's in my community, but they're headquartered out of Arkansas, so they were not included in our particular area or state. So that's my caution or to anybody that's seeking to find one of the lenders out there.
Okay.
Yeah, and I do want to add that as time goes on, SBA is working very hard in adding new banks to our approved list. So if you do go to that particular search tool today and you go to it in a few days, you might have additional banks listed on there. So we are working very hard to continue increasing the number of banks and getting them approved so they can help with this particular program.
Okay.
Right. I think you said that 1,700 were just added yesterday. Is that correct, Victoria?
On Friday, we had 1,700. Today, we have about 3,400. So we are trying to do the best we can, and this is nationwide, to get even more individuals approved to help our small business owners with this application process.
Okay. Another question came in. We're a small business, only 4 full-time employees and 3 1099 employees. Is it a good idea to file for the Paycheck Protection Program?
Absolutely, I highly recommend it. I wouldn't delay either. As Victoria said, I think 62 billion has been appropriated thus far out of 347 billion that's available for this particular program. Though I know that Congress is actually working on a 4th now stimulus and looking at adding more to this particular program. But I wouldn't wait. If you've got employees and you got payroll costs, I would highly encourage you to apply today.
And it's the case even if you do not have employees. If you're self-employed, you can also, correct?
Yeah, again, self-employed individuals can't start applying until Friday.
Great, okay. Another question, is there an allocation by leading or lending institution, maybe the question. So the question is, if my bank is slow on processing the application, will the money run out?
There is a limited amount of appropriation. It's just shy of $350 billion for the Paycheck Protection Program. And 62 billion has already been used. You can see how popular this program is. That's just since the program was activated on Friday. So I wouldn't hesitate to wait. Now, there is no per lender maximum, but lenders may set certain maximums themselves with respect to how much they used to do.
Okay. And the banks still have to stay under their lending limits, though. Is that correct?
Yeah, but the Act actually provides, I believe, for lenders for this not to be part of those lending limits. So, you know, but again, it's each bank's decision or policies that will drive how much they choose to do underneath this particular program.
Okay. Another question is, can employers decrease salaries or terminate employees and still receive the loan?
Well, if in order for them to get the full benefit of the loan, they are supposed to retain their employees at their full salary level. Again, the purpose of this particular program is to help the employees stay employed, whether or not they're at their work location or if they're at home because of the coronavirus. The full intention is to keep our employees employed. Now, if you are going to reduce their salary or reduce the number of headcount, your forgivable loan will also be reduced as well.
Okay. Another question is, initially and this is one I've seen around a little bit as well. Initially, my bank was only allowing customers who had open loans along with deposit accounts to apply. When I contacted other participating lenders, they indicated they were prioritizing current customers. Are you also seeing and hearing that, or are there any rules that SBA or Treasury gave out to indicate that?
No, there's no defined rules for that, but that is we've also heard that with respect to prioritizing those in which are current depositors or in which they already have existing business relationships with. And if you find a participating bank that you don't have an existing relationship with, they may require you to actually open up a deposit account or business account. I would not be surprised by that fact.
Okay. Okay. There was a question looking for clarification. You were throwing out the number of 62 billion. That was billion with a B that has been allocated. Is that correct?
Yes, that is correct as of this morning.
Okay. So it's probably increasing even still now.
It is. Time is of the essence. The deadline for this particular program, as Mike had mentioned, was June 30th of this year. But again, as he mentioned, Congress is looking to possibly add more funding to the program, which will then extend it. But as of right now, time is of the essence, and the deadline is June 30th.
Okay. Another question I think was similar to the last, but just to be sure. So, you know, particular banks have stopped accepting applications. Yesterday, I think Wells Fargo came out and said that they were going to stop. And they, you know, got their link up Saturday to do so. Other banks are lending only if you have an account. Do you recommend just going out to the lender finder on the SBA website to look for more information?
I do. I mean, if your current bank is not accepting applications at this time, you do have the ability to go to other banks. There's no fee for this application from any lender or from the government side. So you do have the option of going outside of your current lender if you need to. So you can go to sba.gov and take a look at the list that we have there and see if there's any lenders in your vicinity that you can reach out to.
Mm-hmm. Okay. I know that Crystal and I have spoken with community banks around the state as well. The smaller guys are really interested in doing these loans and bringing in new relationships.
Mm-hmm.
Go ahead.
Speaking frankly, I mean, if your bank is limiting their participation and not being able to serve your particular need, it may be time to consider a new bank.
And we do have, even just in my South Florida office, we have a list of individuals. We're trying to get them processed as quickly as we can. And a lot of them are these small community banks that are really ready to hit the road running. So as soon as we get them approved, they can go ahead and start processing these loans. So as I said, that list on that web tool that helps you look for lenders in your area should be growing as the days go by.
Okay. And Mike, I think you have a plant out in the audience here. This person has a question. Is there anyone I can speak to for coaching? I'm concerned I fill out the application properly.
Mm-hmm. Yeah, the Sbdc is there to provide that hands-on individual assistance to you. We actually have certified business disaster loans members of our Sbdc, and our consulting or individual assistance is at no cost for a small business. So it is a resource available. I will tell you when it comes to the Paycheck Protection program, that is that what we're going to do is we're going to tell you what it is that I told you today, and that is connect with your banker, because each bank is requiring something a little bit different. You know, we can give you an overview of the information that you're going to need, or the core information. But with the Economic Injury Disaster Loan Program, we can provide that hands-on assistance in helping you complete that application.
And John, I don't know if you want to forward through my slide, but I think that the third to last slide has a lot of important contact information that if we can throw up there, people can jot it down. And then the second to the last slide also has a lot of important information from my South Florida district, because we are holding webinars from 9 a.m. to 5 p.m. every single day, where people can come in, listen about our programs, also and ask questions. And then we're also having virtual office hours that they can dial in by phone or by computer, and we answer their questions. And this goes on from 9 to 5 every single day of the week. And there's also other ways that they can contact us or follow us. For example, they can email southflorida_do@sba.gov. I have folks monitoring that email and responding to questions. And the best way to keep abreast of new information and new webinars and virtual hours is if they go to sba.gov/South Florida. It'll take them to our local calendar of events, and you can see everything there, or just scroll down on the bottom right-hand side. There's an option to join our mailing list. And if you join that, you'll get information every day on news that is going on and any webinars or virtual office hours that we're having for our constituencies.
Great. We will be sure to get these links up on our website as well, so that people can go there and find a whole host of information, including these slides here that we didn't get a chance to go through, but you all can look back through for further information that kind of backs up what's been said so far. It's going to go to another question here. So how can we make the decision to bleed out all cash now to pay our people when the program is going to run out of money? Even if we're on top of applying, they haven't been able to get the applications in. So I think it's just a question of, you know, what's your suggestion to do while they're waiting for the money to come in?
I think that what we're emphasizing is the urgency to get the application as it relates to overcoming the time between now and the receipt of any loan proceeds from either of the programs that we had talked about. You know, that's difficult, and it really is. And I feel the hardship in which a lot of business owners are feeling with respect to their employees. You can always tell your employees that there is a reemployment assistance, unemployment assistance that's available to them if they are, you know, lost their job, or if you delayed them off at no fault of their own because of the coronavirus. They're able to access that as a resource in the interim until you are able to secure the necessary resources to bring them back on staff.
Okay, that's great. There's a few more questions. If you work for a small business and you have paid time off accrued, can they withhold your paid time off and not pay it out to their employees right now? I think that's more of a personnel issue than a lending issue, but I'm not sure if either of you all know the answer to that. Otherwise, Deb, if you want to email that directly to me, and I can talk you through that one.
Yeah. I don't even know if I dare answer that question.
So by the way, when this is towards the end here, I'll put up mine and Crystal's email addresses and phone numbers so you can reach out to us directly. We're trying to put together a webinar at some point in the near future here with an employment attorney to talk about some of these issues. So Next question, what is the advantage of the payment protection loan over my employees applying for unemployment? And that's one that I've gotten a lot as well. So you guys have a response to that?
When you refer your employees to unemployment assistance, there's a potential of you losing them. Furthermore, the compensation in which you can pay them may be greater than what it is that they can receive through unemployment compensation. So, if you're one of those businesses that should be concerned in the fact that, what happens when I reopen my doors and my employees are no longer with me, and they're no longer on my payroll, how am I going to bring them back? Will they come back? Or will they find other opportunities? So really the Paycheck Protection Program, more than anything, is really about employee retention for small businesses. And I know how devastating it can be to lose an employee in a small enterprise. So I think it's a great program to be able to retain your employees.
Mm-hmm.
Another question, when calculating the average monthly payroll, what taxes should be included?
Federal taxes, federal income taxes are not part of the payroll cost. And it doesn't apply to Florida, as there is no state income taxes. State income taxes could be included if your employee was a resident of another state, or if you were in another state.
We have a shout out here from somebody that's going to be doing some presenting for us here in the future. One of our Chairman Circle members, Carr Riggs and Ingram, is going to be doing some tax webinars for us coming up. So please watch out for that. Can we use the proceeds to pay back pay to employees if they were furloughed in order to get the forgiveness if they've received reemployment benefits?
Yeah, well, I don't think that can be done because they would be double dipping. Originally, if they did not go into unemployment, the answer would be yes, you can go back as far as February 15th to utilize those funds. However, if they already are on unemployment benefits, I don't think that you'll be able to do that. I don't know, Mike, if you have any insight on that.
No, I've gotten this question a few times before, and there's been no authoritative guidance with respect to this. But I think in the spirit of the legislation, as Victoria said, the intent is really not to be able to double dip. So if they are receiving already federal assistance through unemployment assistance, then they're unlikely to count that as compensation. Now, if you bring them back, a furloughed employee, it's my understanding that any payroll that you pay them during the period of February 15th to June 30th is an allowable payroll cost, and therefore can be forgiven with the Paycheck Protection Program.
So
Correct.
just to be sure, if they're on their 8-week period that's judged to be forgivable, and their employees are not at that time getting reemployment benefits, they are eligible to get the forgiveness.
Yes, the employer would have to make a good faith effort to rehire them.
Yep.
And then they can go ahead and utilize their salary and benefits as part of their payroll calculation for this particular program.
Okay.
That's good clarification.
Okay. Let's see here. So question, the government is going to pay the next 6 monthly payments of an existing 7A loan. Does that start in April or May?
It starts the month following the enactment of the CARES Act, which was March 26th. So it will begin with any payment that's due. I think SBA had 30 days in order to begin making those payments. So any payment that was due in late April, beginning of May would be the start of that.
Okay. All right. If there are any other last questions, folks, please put them in your sharing portal there, your chat portal, and we'd be happy to take a last-minute question here. Otherwise, we're at the top of the hour, and I am going to put up mine and Crystal's contact information here. So you've got our email addresses, our phone numbers, and obviously everyone is working remote these days, but we can be reached by email or cell phone. So please don't hesitate to reach out to us directly if we can help get any answers to questions for you all. And again, watch your email because we're going to be doing some more of these webinars focusing on various subjects. But today I want to thank both Mike and Victoria for your time very much. Very informative for us. And one more question here came up. So from one of our small business board members, so have to make sure and get her in. So I have an employee that's working at another, so this is a question I've had from a number of different people, is kind of contract workers. So I have an employee that's working at another business that's still open because they're considered essential. Do I pay her if she's working somewhere else during this time, or how do I handle that? You all know the answer to that? Is it based upon what you were paying her when she was your employee?
That is correct. Yeah.
Okay.
Yeah. So it would be whatever it is that you were paying her previously as a part-time employee. Business.
Okay. All right. Well, again, thank you both for your time very much, and to all those members out there and some non-members that were on the webinar for us today. Reach out to Crystal or I if you have any questions, but Victoria, Mike, thank you so much for your time. I know this is a very busy time for you all as well. You're trying to answer all these questions from so many businesses throughout the state of Florida, so we really appreciate it. This concludes our webinar for the day, and thank you all for attending.
Thank you.